The views and opinions of this program are those of the hosts, guests, and callers. There is substantial risk of loss in trading futures and options, which you should carefully consider prior to trading. Well, we had a fairly quiet day overall in the grain trade. Soybeans did get a little pop. Is there some concern out there about the weather potentially here impacting bean yield early this week, as well as we're watching just the overall kind of movement in these contracts? I guess, will grains kind of stay range bound here as we head to Labor Day weekend? We're going to talk about all of this as we take a look at Monday's market action and more. Joining us now, John Heimberg with Total Farm Marketing is with us. John, good to talk with you. And kind of a quiet day in the grain trade overall Monday. And, I wonder if these markets might end up staying a little range bound here after last week's crop tour. You got a holiday, 3-day holiday weekend coming up. I guess about the only thing I saw out there was the talk about the weather, John.
Yeah, I mean, if we're going to stay range bound, I guess we're going to focus on the soybean market there, because obviously corn breaking to new lows is maybe trying to find the bottom of the next range, with the way things are acting there. We'll touch base on that first. But I think the really only thing that triggered some buying inside that soybean market today, obviously, is a little talk on the weather. We got some pretty good humidity, heat indices, running into well over 100-degree level across the majority of the corn belt for the next couple of days. Pro Farmer just got done with their tour. They put that soybean estimate just under 55 bushels per acre, seeing just the potential for a really big crop. Obviously, if we're dealing with some hotter weather, drier weather overall, maybe we lose a little bit of that top end. So maybe enough to get the market to stabilize. Throw in there today, crude oil's got a really good day going here too. So that's helping push that soybean oil market up. And then maybe we're just still seeing a little bit of demand here, but still not the level that we need. So I'm still very, very concerned for the soybean market. It may be still a little smaller, but it's going to be still a really big crop of beans, when we get the combines rolling here in a couple months.
Yeah, very, very true. And it might have been something where a little short covering on Monday, maybe that drives some sort of, movement if somebody was looking for some. But then again, we're only talking 5, 6, 7 cents. So maybe not. We'll have to watch it. How about that corn market, John? You mentioned hitting the new lows there. And I know we hit some new lows in wheat too, spring wheat as well. But talk about that corn market first. I mean, what are you keeping an eye on here this week?
Well, this is first notice day for September contracts, and I've been talking about this for a while. There's a lot of old crop corn bushels that are moving out there. There's basis contracts that need to be priced probably in the next day or two here, and the market kind of knows that they've got those people kind of over a barrel here. I mean, we look at the spread between September to December, 24 cents, 24.5 cents on the close today. That's extremely wide. They're basically kind of putting the ball in the producer's court that's got these contracts. If you roll it, you're going to have to hit that big, spread on top of your contract. If you price it, you're dealing with prices that just obviously aren't very, very good. So they kind of got people over the 8 ball here, and the market's reflecting that. I mean, we saw this for February for March contracts. We saw this on July and in June for the Julys. And now here we are in September with that next set of basis contracts got to being priced out. Producers may have been holding out, thinking they could get that rally that never came. And now they got to make some decisions. So that old crop corn movement, I think, is a big factor here, helping push this market to new lows. And with the close where it is today, too, probably will still keep the selling pressure going into, like I said, at least the middle of the week. And then maybe we get past this pricing window as that first notice day is coming around the corner here on Friday.
And I know it's, when this corn market continues to make new lows and all the pressure we've had in beans and wheat's not looking too great either. We've talked about this, John. It's been a tough conversation for a lot of folks. And, it's one of those things, especially as they're trying to make decisions for 2025 too already, that there's a lot of folks that are staring at a lot of red numbers on their books as they're kind of penciling stuff out. So again, it really feels like it comes back to smart risk management here, John.
Yeah, it is. And then you got to get the pencil pushing right now for next year. And if there's some values at work, make sure you're protecting it to some extent. I know we think downside still got some room here in my mind. And, the biggest factor, and we still talk about it, and the biggest thing still weighing on this market alone is just where we are in the demand base and the demand side of the equation, especially in soybeans. I mean, you just go take those numbers, Pro Farmer put out there at that 54.9. Let's say it comes down to 53.9 if we lose a bushel here because of the heat or so. You plop that into the balance sheet. That really brings that carryover up well over the 600 million mark. And personally, I think demand's probably overstated by 100 million bushels. So that's something that's concerning me for new crop demand. So, you're looking at a pretty big bean picture here, probably the second largest since the 2019 900 million bushel carryover that we had with the trade war. If those things kind of get realized, you're looking at a bean market that's going to be pushing sub 9 probably sooner, and it'll get back up through the 1050 area. So me right now, staying on the defensive in the soybean market. Obviously, we'll see the extent of weather here. But, at least in our area of the world, if we get through these next couple of days, it's going to cool off, be very temperate. We do have some shower chances coming now. So the key will be if we get some rain. But, temperatures in the 70s is not going to put a lot of stress on the crop as we get through these last stages. So that's a big concern for me in the soybean market here. The corn side, though, let's look at what I took away from the tour in terms of what Pro Farmer put out there was the variability side of things. And I've had those conversations with guys today. Maybe when we get that September report, we're still going to have a very large supply of corn. But maybe that yield that USDA put out there at 183 off the August numbers might be a little too firm with the variability. Obviously, they're going to have more boots on the ground, more samples by far than what Pro Farmer put together in terms of calculating that yield. But there's a possibility here that, maybe we're at a spot after we get through this pricing window that the market can find some stability, maybe just trend sideways until we get some further numbers. So I'm kind of watching that, going forward here, that we got a little bit of price stability in this market.
Definitely. Very, very true, John. Very, very true. And it's one of those things where we just have to watch it closely and see what can happen here moving forward, no doubt, as, it's just part of what we're working with. The wheat market, I'm hearing some chatter, spring wheat, maybe some quality concerns in eastern North Dakota and into Minnesota. That's something that I know is something we need to keep an eye on here. Maybe some vomitoxin issues or DON can always be an issue. What are you hearing from any of your clients up in the Northern Plains? Are you starting to hear some of that same chatter of maybe some quality issues with spring wheat?
That is some of the talk that's been out there, obviously, with the excessive rains that they took on here right before harvest. Where pretty much the worst time to start getting good rainfall is obviously right when wheat's getting ready to go. So with that, we'll have to see how that plays out. Short term, it's probably not going to show its head as much as it will if we more on the longer term scale as we get through some of these bushels in that regard in terms of the hedge pressure. But yeah, that demand for quality, that hunt for that type of higher quality product could bring some premium into the wheat market. So we'll have to keep an eye on that going forward. Right now that wheat market's just in a rough spot between the harvest pressure here as well. With that SRW crop, again, we still need to see wheat products move, with a lot of anticipation of further demand coming, but our prices still just aren't competitive on the global scale. So we still need to see some movement there. Now, today's September contract, at least in the Chicago wheat or the SRW, breaking through the $5 barrier. So it's pretty disappointing there. But seasonality wise, maybe we're getting to a point here we can find a little bit of a floor. We'll have to see as we get through harvest pressure, this market has a tendency to find a little bit of footing and hopefully turn around.
John, how about the dairy market? I want to ask you about that real quick before we touch on cattle and hog trade. I know there's been some volatility there. What's the latest you're seeing with dairy as we look to wrap up the month of August, John?
Cheese demand is good, and that's one of the biggest things I think is reflective in the price here. Big moves today, 10 cents higher blocks, 15 cents higher in barrels. And that just triggered that limit up move that we saw in the milk market as we, kind of break it out to new highs here again. So it's a combination of things. Cattle numbers down, production's, is down slightly, but now we're seeing some demand pick up with a little tighter supply picture, and therefore we get the run that we're seeing in milk prices. This is that key window. Schools are back up and running. You got football season right around the corner here, and that brings on that pizza cheese and pizza sales. So this is a really good demand window, and it's definitely being reflected in the milk price.
How about over in the cattle trade, John? Did you feel like that cattle on feed report from Friday was bearish, neutral? I mean, what's your thoughts? It looked like the futures trade seemed to be okay with it as we work through Monday's session.
It was neutral to a touch bearish, obviously, with that higher placement number than we wanted to see. And, again, we're getting cattle in from other sources other than the feedlots or in the cattle production right here in the United States, bringing some imported cattle in, likely filling that placement void. The market reacted to that probably more because we got a lot of negative stuff priced in with the difficult week last week. Really not much of a recovery, though, when you actually just look at the charts today. We did push it up a buck and a half higher on that October contract, and we just kind of ran out of gas, and faded off of some resistance. So I would classify it as an astounding move in that regard. So we'll have to watch how tomorrow plays out. To me, it's still about two things: retail values, which choice carcasses were soft today. Select actually fell under the $300 handle today in terms of retail values. Cash trade softer by another buck or two last week. We'll see what the trend is again this week. I think if those fundamental trends continue to struggle here, the cattle market's going to struggle, even though we've taken a lot of money off the table so far. But right now we're at a spot here. I think this market may have a little bit more correction in front of us before we can finally find some footing. Even though those longer term fundamentals are still friendly in this cattle market, it's still going to come down to, does the consumer want the product, and the demand that needs to be there for them to help support these cash prices.
John, any notes in the hog trade for us, as well as we're getting close to wrapping up our conversation here today?
Hog trade, little consolidation today, kind of faded off its highs. Not sure if that's a topping signal or, like you said, just a consolidation signal. Nice move in that October contract last week, and we got a pretty good seasonal window here where that hog market could climb higher. So watching where the cash market's going, watching the retail side, there's still a pretty big discrepancy between the cash market and the futures market here, at least according to the index. So those things at least maybe point us a little bit higher here, but we're going to need some follow through after last week's strength, kicking through today's price action and get this market moving a little bit further.
John, as always, appreciate the time. Any final thoughts for folks? Anything you want to reiterate to them here as we near the Labor Day holiday weekend?
Yeah, we talked about it earlier. Just get the pencil pushing. There's a lot of hard options right now in terms of what to do, because there's not a lot of good sources, a lot of good decisions that are going to feel good, in terms of the price value here and what we got to get done. But don't forget those outside costs. If you're thinking about storing grain, you got interest rates, you got the carry in the market. We got a heavy supply market, relatively weakened demand picture. That carry makes me extremely nervous. I've been working a lot of options for March already over the bins or under the bins here for guys if they're going to try to hold that out there. And the last thing you want to do is take on those extra risks and then watch this market bleed carry out, which would only even add more to the pile as we get further down the year. So, if there's some value you like out there, find a way to get a floor under it. Hope the put is wrong and the market does rally. Now we're going to start talking about Brazil and what's going on there. They're starting their corn planting here real soon, if not even already getting some in the ground, even though that's their early corn, which isn't so key. But those things are going to be coming on the radar here. And if that Brazil weather turns out to be pretty good going into the winter months, it's going to be real hard for this market to find footing with that possible production coming here after the first of the year.
John, if folks want to reach out to you for a conversation there at Total Farm Marketing, how can they get in touch with you?
Yeah, feel free to give me a call, 800-334-9779. Shoot me an email at johnh@totalfarmmarketing.com. And don't forget that website of ours, totalfarmmarketing.com.
Always good to chat with you, sir. We won't talk to you next week, Labor Day. No markets on Monday, so you get the week off. We'll talk to you in a couple of weeks, John. Thanks for being with us today. Appreciate it.
Sounds good. Have a good Labor Day weekend. Stay cool out there, definitely, and safe these next couple of days.
I couldn't agree more. John Heinberg with Total Farm Marketing joining us here today on Market Talk. Find us at markettalkag.com. I'm Jesse Allen. Have a great afternoon.
Make sure to subscribe to the Market Talk YouTube channel. You can watch our latest interviews with top market analysts in the country, find bonus content, and much more. It's easy. Just go to youtube.com/@MarketTalkAg and hit the subscribe button. Or you can search for Market Talk Ag on YouTube.